Cryptocurrency has always been an industry of rapid innovation and dramatic price swings, but one thing remains clear: it is here to stay. Bitcoin, the pioneering digital asset, continues to shake up the financial world. Whether it's major institutions investing billions, governments adjusting their regulatory stance, or new blockchain-based projects emerging daily, the crypto market is evolving like never before. Yet, despite undeniable growth, we are witnessing volatility that can make even the most seasoned investors nervous. News of economic shifts, government regulations, and market cycles cause sharp price movements. However, these fluctuations are not signs of weakness but rather signals of a maturing industry. In this video, we will break down the current state of the crypto market, the role of institutional investors, the rise of altcoins, and how government policies are reshaping the landscape. Most importantly, we will explore why Bitcoin remains a critical asset in any investment portfolio and how its path toward mass adoption is inevitable. Stay tuned as we uncover the key developments that are setting the stage for a crypto-driven future. The cryptocurrency market is at a critical moment. Bitcoin is experiencing a drop triggered by economic shifts, including new tariffs introduced by the U.S. government. Despite this temporary downturn, investors should remain focused on the long-term vision for digital assets. The newly appointed U.S. Treasury Secretary has emphasized that everything's on the table with Bitcoin, signaling a potential shift in the government's stance toward crypto. This statement alone is a strong reason why selling right now would be premature. The crypto economy is here to stay, and this is just another cycle in its evolution. Historically, Bitcoin has undergone multiple market corrections before reaching new all-time highs. Each time skeptics doubted its recovery, Bitcoin defied expectations and surged higher. The current market decline is no different. Smart investors recognize that volatility is an inherent part of crypto and that dips present buying opportunities. Additionally, the macroeconomic landscape is shifting. Inflation concerns, geopolitical tensions, and increasing interest in decentralized financial solutions are driving people toward Bitcoin as a hedge. Unlike traditional assets, Bitcoin operates independently of central banks, offering a unique store of value in uncertain times. Another factor contributing to the temporary price dip is investor sentiment. Short-term traders often react to news with panic selling, but seasoned investors understand the importance of holding through downturns. Whales and institutions are accumulating Bitcoin at lower prices, positioning themselves for the next major rally. In essence, the current market conditions should not discourage long-term believers in crypto. Instead, they should reinforce the importance of patience, strategic investing, and staying informed about regulatory developments. Bitcoin and the broader crypto market are attracting attention from institutional investors, pension funds, and major Wall Street players. Global head of asset management at Galaxy, Steve Kurz, states that the current crypto market is vastly different from previous cycles. The level of understanding and involvement among traditional investors is deeper than ever before. Even skeptics are now well-versed in major cryptocurrencies like Ethereum, Solana, and meme coins. With Bitcoin ETFs establishing a successful track record, more institutional capital is flowing into the space. Pension funds and wealth management firms managing trillions of dollars are now considering cryptocurrency allocations for their portfolios. This shift marks a new era for digital assets. Additionally, large investment firms are offering structured financial products, including Bitcoin-backed loans and derivatives, further integrating crypto into the global financial system. Governments and central banks are also exploring ways to incorporate digital assets into their economic models. The increasing use of blockchain technology in banking and finance indicates a shift towards broader institutional adoption. The presence of crypto-friendly regulations and clearer compliance guidelines further boost institutional confidence in the sector. Bitcoin is not the only cryptocurrency making waves. Altcoins are entering their most promising cycle yet. While Bitcoin is recognized as digital gold, altcoins are proving their value in various ways. Solana, for instance, has emerged as the most used blockchain in the world, processing over 50 million daily transactions and facilitating $10 billion in daily value transfers. Meanwhile, stablecoins are projected to grow significantly, from a $200 billion market cap to potentially $450, $500 billion. As regulatory frameworks take shape, the adoption of crypto-based financial solutions will accelerate, providing unprecedented growth opportunities for altcoins. Furthermore, decentralized finance (DeFi) applications continue to expand, offering alternatives to traditional banking services such as lending, borrowing, and yield farming. Ethereum's transition to proof-of-stake and the rise of Layer 2 scaling solutions are enhancing blockchain efficiency, making altcoins more attractive. With advancements in interoperability, more projects are integrating with existing financial systems, paving the way for mainstream adoption. A significant shift in government policy is taking place. The previous administration's anti-crypto stance has given way to a new approach focused on integration and regulation rather than outright opposition. Legislative efforts are underway to create a structured environment for crypto businesses in the U.S. This is bringing builders and innovators back to the country, ensuring that the future of finance includes blockchain technology. Regulatory clarity is enabling the development of compliant digital asset exchanges, custody services, and tokenized securities. The increasing collaboration between policymakers and industry leaders highlights a more positive outlook for crypto's future. Countries competing for crypto innovation are setting the stage for the next phase of financial evolution. Furthermore, financial institutions are now working alongside regulatory agencies to ensure compliance with anti-money laundering (AML) and Know Your Customer (KYC) policies. This move helps legitimize the industry and allows crypto projects to scale with the backing of regulatory frameworks. Governments are also exploring central bank digital currencies (CBDCs), which could coexist with decentralized cryptocurrencies, providing users with multiple options in the evolving financial ecosystem. The narrative around crypto has shifted from a disruptive, unregulated space to a sector poised for integration within the global financial system. With stronger regulations and legal backing, institutions can now confidently allocate resources toward digital assets without fear of unexpected crackdowns. This marks the beginning of a more mature and stable crypto industry. The meme coin phenomenon continues to evolve. Even mainstream figures like Joe Rogan are contemplating launching their own digital assets. This highlights the increasing mainstream acceptance of crypto as a funding and investment vehicle. Meme coins, once seen as a joke, are now serious business, representing a new way to fund projects and communities through decentralized finance. The rise of social token economies and NFT-based projects is further diversifying the digital asset space. Celebrities, influencers, and companies are leveraging blockchain to create community-driven ecosystems. New projects are being designed to provide real-world utility, including gaming, metaverse experiences, and decentralized social networks. Additionally, many meme coins are now incorporating staking, governance mechanisms, and smart contract functionalities, making them more than just speculative assets. Their increasing adoption in payment systems and online communities continues to redefine their place in the market. Michael Saylor remains one of the strongest advocates for Bitcoin, shutting down skeptics with undeniable facts. Bitcoin is the best-performing asset in the S&P 500, outperforming even giants like Nvidia. It has the most intense options market, the most profitable convertible bonds, and continues to generate wealth at an unparalleled rate. For those who still doubt Bitcoin's relevance, Saylor's message is clear. If you don't think Bitcoin is the most interesting asset right now, name one that is. Additionally, Bitcoin's security and decentralization continue to make it the most robust digital asset. The rise in institutional demand and limited supply reinforce its value proposition as an inflation hedge and store of wealth. Do not be scared by short-term price drops. As history has shown, every dip in Bitcoin is an opportunity for long-term holders. Major investors and institutions are already positioning themselves for the next leg up. BlackRock CEO Larry Fink and sovereign wealth funds are now discussing whether a 2% or 5% allocation to Bitcoin is the right move. If all major funds adopted even a small allocation, Bitcoin's price could skyrocket to $500,000, $600,000, or even $700,000. Additionally, Bitcoin's scarcity model, combined with increasing global adoption and regulatory clarity, provides strong support for long-term value appreciation. Experts predict that within the next 5 years, Bitcoin could become a staple asset in diversified investment portfolios, further driving up its valuation. The crypto industry is evolving faster than ever, proving its resilience through market cycles. Institutional investors are validating Bitcoin and other cryptocurrencies, driving increased legitimacy and widespread adoption. Altcoins are maturing, providing groundbreaking solutions in decentralized finance, gaming, and digital ownership. Government policies are shifting toward regulation rather than restriction, opening doors for mainstream adoption while ensuring investor protection. Meanwhile, Bitcoin continues to solidify itself as the digital gold of the modern era, with financial giants positioning themselves for massive future gains. While volatility remains an inevitable part of crypto, history shows that those who stay informed, patient, and strategic reap the most significant rewards. The next few years could define the financial landscape for decades to come. This is your chance to be part of the digital revolution. The future of finance is being written today. Will you be a spectator or a participant? Stay ahead, stay informed, and embrace the crypto future. The journey is just beginning. If you like this video, don't forget to subscribe and like to keep up to date with events in the world of cryptocurrency. Nick was with you. Thank you all and see you again.